Most people think that the worst part of a medical emergency is the illness itself. But the truth is, that's not the worst part. The worst part is the moment where you're standing at a hospital billing desk holding a 10 lakh insurance policy only to be told that you have to pay 4 lakhs out from your own pocket. Now, you did everything right. You paid your premiums, you disclosed your history, you stayed covered for years, and yet you are still going to go broke. Now, this isn't a glitch. It's the fine print working exactly as intended. Now, your health insurance policy is likely a papered shield. It looks solid on the outside, but moment a real medical bill hits it, it dissolves. In 2024, over 26,000 crores in claims didn't just vanish, they were legally denied because of the words you never read. We're not talking about fraud, we're talking about families who thought they were protected only to find out that their total cover was a mathematical illusion. So here are 7 traps designed to keep your money in the insurer's pocket. Now, if you have a policy, open it and let's go through this together. But before we get into this video, this is not anti-insurance, okay? Health insurance is one of the most important things you can buy, and one hospitalization can erase years of savings in a matter of days, so you definitely need it. But there's a big difference between having insurance and having the right insurance that works. And that difference almost always comes down to these clauses. So let's go through them one by one. The first one is called a Deceasewise sublimit, and it's probably the most quietly dangerous clause on this list. Now, you buy a policy, the sum assured is 10 lakhs, and you feel covered. What you don't realize is that your policy has a completely separate, smaller limit for specific diseases buried in the annexure, not on the summary page, in the annexure. So even though your total cover says 10 lakhs, the insurer will only pay 2 lakhs for a cardiac procedure, 1.5 lakh for a knee replacement, and 50,000 for a cataract surgery. So your total cover and your cover for any given disease are now 2 different numbers. But why does this exist? Because cardiac issues, orthopedic procedures, cancer treatments, these are expensive, high frequency claims. So insurers started capping them specifically to control these payouts. And they hid it in the annexures because if it was on the front page, you would obviously pick a different plan. Now ask directly, when you are evaluating any policy, does this plan have a disease-wise sublimit? What you want is 0. Now the second clause is a room rent capping. And I want to be very careful here because most of the people think they understand how this works, but they really don't. Now room rent capping means your policy limits how much it pays per day for your hospital room. Either it is a fixed number like 5,000 rupees a day or a percentage of your sum assured, which is let's say 10 lakh policy, 1% of that comes to 10,000 rupees a day. Now, most people hear that and think, fine, I mean, if I end up in a more expensive room, I'll just pay the extra cost. Simple math. But that's not how it works. Let's say your room limit is 5,000 rupees. The room fits in your budget is not available. Hospital is full, and this most likely happens. So you end up in a 10,000 rupee room. Now you used a room that is 2x your limit. Now the insurer now applies what's called a proportionate deduction. Because the gap is 50%, so they will deduct 50% from your entire bill, not just the room. Everything, your surgeon fees, medicines, diagnostic, consultation charges, everything gets cut by half. Shocking, right? So your 3 lakh total hospital bill becomes a 1.5 lakh payout. You pay the other 1.5 lakhs. Not because you asked for an expensive doctor, not because your treatment changed, but because of your simple 5,000 rupee room. Now sometimes this is not even by choice. Just because the cheaper one wasn't available that night, the hospital put you in a bigger one. So look for plans with no room rent cap at all. And if you're getting admitted somewhere, before anything else settles, first check your room category against your policy, and that is the first thing you should do. Now, coming to the next one. Now, this is exactly why most people feel like health insurance is a scam. But the truth is, the product isn't the problem. The selection of the product is the problem. Now, you shouldn't need a law degree just to make sure that your hospital bill gets paid. But this is where the right guidance makes all the difference. Now, if someone in your family falls ill or meets with an accident, health insurance should be your biggest support, not another source of math-induced stress. And honestly, it's more affordable than you think. For example, a premium of just 700 to 900 rupees a month can cover you up to 10 to 20 lakh rupees, protecting your life savings from the fine print traps. In fact, right now is the best time to lock in because the government has removed GST on health insurance plans, giving you an immediate 18% saving on your premiums. But I also know what you're thinking. First, Shashank, how do I find a plan that doesn't have all these rent caps, hidden deductions, loopholes, and with over 25 different companies, hundreds of plans, it usually gets very easy to get overwhelmed and just to pick one with the prettiest brochure. Now that's why I recommend you use DTO Insurance. Now DTO is a Zerodha-backed company that acts like your personal insurance filter. Now they will help you find the plans that actually work even when you're in the hospital. Now the best part is that consultations, the deep dive calls, and the claim support are 100% free. So if you're worried about a claim being denied, like that room rent trap we discussed, DTO actually fights on your behalf, handles the paperwork with 24/7 support, and unlike typical agents, they have a no spam policy. So they will not call you unless you ask them to. So I use DTO's website and consultations to shortlist the right plans for my own family because I wanted that clarity as well. So if you want to make sure your paper shield is actually made of steel, check the link in the description and you can book a free consultation call with them. Now, even if you find a plan with no room rent caps, there's a third clause that can still wipe out your entire claim before you even leave the house. Let us learn that. And the third clause is called co-payment clause. Now, co-payment is basically a clause where it says that every time you make a claim, you pay a fixed percentage of the bill yourself. Insurance offer it at very low premiums, and a lot of people take it to save 1,500, 2,000 rupees because they feel they actually won. But if you actually run the numbers, 20% copay on a 2 lakh surgery means you're paying 40,000 rupees out of pocket. Now, to break even on that 1,800 annual premium that you wanted to save, you need 22 years without making a single claim. So avoid voluntary co-payment clauses. Now, the slightly higher premium now is much worth it. Now, coming to the next clause. Keep learning, okay? The next one is called waiting period. And every policy has this. Sadly, there's no exceptions to this. The question is how long and what do they apply to? And this applied to me as well. Now, there are 3 types. The first one is the initial waiting period. For 30 days from when you buy the policy, you're not covered for anything except accidents. So you paid your insurance, but you have to wait for 1 month until it turns on. The second is called pre-existing disease waiting period, PED. Now, if you have diabetes, hypertension, thyroid condition, I have, I have high cholesterol. So cardiac was actually in my PED. So anything diagnosed before you bought the policy and you declare it, then you have to wait. Sometimes it is 2 years, sometimes it is even 4 years before that condition can be actually covered. For me, it was 2 years. So if you buy a policy today, declare a blood pressure issue, and then you have a cardiac event within 18 months, the insurance connects the two and denies the claim. Now you are still inside the waiting period, and that is why it gets denied. So the third is a disease-specific waiting period. वो भी होता है. So even for conditions you never had, example cataract, hernia, joint replacement, these often carry 2 to 3 year waiting periods regardless of your health history at any given point of time. So when you buy insurance, you better buy them young when you're healthy so that fewer conditions you have to declare and the less exposure you carry. Now the aim for 2 years or less on pre-existing disease coverage is what is the benefit of doubt you should give. That is the best one to do. Now restoration benefit is another one called clause 5, and this one is sold as a great feature, and it can be, but there are 2 versions. One of them is absolutely useless, one is good. So restoration means that if you exhaust your sum assured during the policy year, the cover gets topped back up and you can use all the 10 lakhs. Now the policy restores it so you have coverage for the rest of the year, and obviously this sounds great. But many policies have restored amount that cannot be used for the same illness you just claimed it for. So if someone in your family has had a serious procedure, the cover gets exhausted, restoration kicks in. 3 months later, that same person has a complication from that condition, the restored cover does not apply for the same illness. So for a family floater where one member has a recurring chronic condition, this makes the restoration benefit nearly worthless at exactly the moment you need it the most. So ask specifically, does this restoration apply to the same illness or only to different illnesses? Better policies allow same illness restoration. So know which one you have to buy before you actually go for it. Now the 6th one is called day care coverage. Medical procedures have changed. A lot of things that used to happen overnight and require to stay overnight hospitalization now takes few hours. Your cataract surgery, dialysis sessions, certain chemotherapy treatments, done, discharged in the same day, go home. Now some policies still carry old language that says we will only cover hospitalization of minimum 24 hours, which means if you're admitted at 9 a.m. and out by 5 p.m. for a completely legitimate procedure, they will not cover it. They will say that the clause says we don't cover daycare because it comes in the day. Now that is the problem. So look for the language that explicitly states all IRDAI listed daycare procedures are covered. Now, if all of you see a 24-hour minimum with no carve out, that's a problem, especially for dialysis or cataract surgeries for older family members. Now, the last clause is the most uncomfortable one on the list. It's called reasonable and customary. And the reason it's uncomfortable is that this is where insurer has the most subjective power. Now, most policies include a line, small text, back of the document, saying they will only pay for cost deemed reasonable and customary. Now, India doesn't have a standardized rate card for medical procedures. So different hospitals will charge you very different amounts for the same treatment. So insurers, to protect themselves by reserving the right to pay only what they feel is considered reasonable. But the insurer decides what's reasonable, not you, nor a neutral third party. Ideally, it should be a neutral third party. Now the insurer, what they will do is they will look at your 3 lakh bill. They will randomly decide that 2 lakh is what we feel consider reasonable pay for a procedure in that city, and they will only pay you that. Now you have only 1 lakh gap left. And you will have to find out after the fact that when you're already exhausted, that you're doing all this paperwork, that time you realize that you have to pay this 1 lakh. Now, sadly, you can't avoid this clause fully. It is in most policies. What you can do is use your insurer's network hospitals where rates are already pre-negotiated, and this kind of dispute is far less common. And if a claim does get cut on these grounds, don't accept it quietly. You can actually dispute it. And that's exactly where having someone in your corner like DTO will make a good difference. Now, one more thing worth checking that often gets missed is your hospitalization cost don't start at admission and end at discharge. Before you go in, consultations, blood work, scans, after you get out, follow-up tests, medicines, physiotherapy, all of these things are very important. Now, good policies cover 30 days of pre-hospitalization and 60 days of post-hospitalization. Cheaper plans offer cap it or cover far less. So only on any major procedure, those costs can even go up to 40 to 50,000 rupees. So in one line, your policy will be written so you can go find it. Now these are the 7: sublimits, room rent capping, co-payment, waiting periods, restoration benefit, daycare coverage, and reasonable and customary, plus the pre and post hospitalization cost. So none of this is an argument against health insurance. Please buy it. And if you don't have it, buy it this week only. But one hospitalization can erase your years of SIP savings in a single day. So there's a difference between having insurance and having an insurance that actually works. So take your existing policy, check it for these 8 things specifically. If something doesn't look right, the DTO link is there in the description. Go book a free call with them. They will not spam you. They will actually sit with you and explain what is your policy doing, whether it's good or whether it's bad. And if this video helped you catch something that you thought was okay in your policy, then share it with someone who has an insurance but have never read their policy. That's basically most people. So it might genuinely be the most useful thing you do today. This is me, Shashank Godappa, signing off, guys. Take care. See you. Bye-bye.